By my demographic analysis, the greatest boom in history. When I was predicting this in the 80s, people thought I was crazy, that the U.S. could do so well. They thought Japan and Asia was going to take over the world. I said, no, that we still have a giant, one of the best baby booms in history coming along, and they're going to spend and earn a lot of money, and we're going to have the greatest boom in history from 1983 to 2007. And then 2008, of course, it did go down. That caused a shock to the economy. And then governments have been printing money ever since. Now to print money for a year to overcome a strong downturn like 2008-9, I'd agree with that. 1 year of money printing. To be printing money 13, 14 years and escalating and printing and fiscal stimulus combined after COVID for 2 years, $10 trillion, half of GDP, is insanity. How crazy things have gotten. What we have now is we have the greatest bubble in history because governments fought the slowdown after 2008, which was very serious and would have been more serious and should have lasted into 2010, much like the 29 to 32 collapse. They just bubbled up financial assets. They haven't changed, incomes and stuff. They bubbled up financial assets, which means the rich, which were already getting richer in the greatest bubble boom in history, got even richer, and everyday people are still struggling. And now we have an economy, and I've been warning for years, I don't know exactly what's going to happen, but it's happening now. You can't do this forever. You can't just print money and grow an economy past its fundamentals of what I study better than I think anybody in the world. When do people earn and spend money over their life cycle? What's the life cycle of people, and how do generations, particularly the largest in history, at least the largest in 250 years, the baby boom generation, affect that boom and bust? And we are still in the bust wake of the baby boom's peak into 2023-24 before we can grow through natural causes. And I see that this government printing scheme is now failing, despite printing more and more, failing anyway, because you can't do this forever, and it's going to collapse, which is just in time for us to balance out the economy so we can grow again with the millennial generation from 2024 forward. So I'm happy to see this collapse. I'm happy to see a downturn, damn it. We should have had a bigger one in 2008, 9, and 10 and got rid of most of this bad debt. Now we have more bad debt than ever. We're going to get rid of it in the next few years. It's going to be painful. It's common sense that you can't just grow by printing money out of thin air. I mean, how common sense can it be than that? The millennials do not bring the upward natural momentum until 2024, and they will peak by 2037, much shorter boom than the baby millennials. So here's an important point, and nobody gets this, okay? Even the millennials, with their spending power as a smaller generation, less long in birth, only take us back to where the baby boomers took us. We only get back to even adjusted for rising productivity. We will never see a boom like 1983 to 2007 again in the US, and most of the developed world will never, and Europe's already behind us. I tell you, anybody right now in the markets, whether it be bond markets at the lowest interest rates ever, long-term, or stock markets, the highest valuation, if you invest today, even with no predictions of up and down economy, you're likely to make, a couple percent a year for the rest of your life. You're not going to be able to retire profitably until the markets come down to reality and you can invest at fair asset prices again. The millennials are causing, with less spending than the baby boomers who already peaked at age 46 to 47 before them, they're causing a slowdown. And instead of governments helping to restructure debt, we've got tons of bad debt now from the great boom from 83 to 2007 that needs to be restructured. They're encouraging people to keep that bad debt in place and not to reinvest in new industries and stuff. They're doing all the wrong things because they don't want to have a recession. You know what recession is to me? Sleep. Try not sleeping for 3 days and not become a crazy person. It's already proven. 3 to 5 days, no sleep, you'll become a crazy person. We have to grow and expand all the innovation of the past, and we have to slow again and restructure and cut out losing companies and losing things and reinvest in the future. And governments are interrupting the free market capitalist system that has made us the richest and the greatest advance since the late 1700s in all of history, because they don't want to have a damn recession. So what we have now, and I got a number on this, it's close to $600 trillion in financial assets globally. Okay, 600 trillion, that's about 7 times global GDP at 95 trillion. And normally financial assets are a premium 2, maybe 3 times. So the biggest bubble in the world is all financial assets, even bonds. And when you have a crash like this, when these financial assets start to crumble, the money has to go somewhere. It goes into the safest areas. So it is the income producing real estate, multifamily mostly, and it is the treasury bonds, the highest quality government bonds. If the US government can print enough money to keep a dumb bubble going, they'll certainly print money to pay their bonds off, their treasury bonds, okay? You don't have to worry about a default on 30 or 10-year treasury bonds. And again, I go back and say, okay, let's look at 2008. When I look at the 2008 crisis, that was like 1929 to 32 coming in, except this time, massive stimulus, which they didn't do back then. So they come out of it, okay? But that's when you see things go down, financial assets go down, flirting with deflation. This time we're going to deflate more because they've tried to pump it up and it's failing anyway. So financial assets keep falling. So the money has to go somewhere. So what it goes into the safest bonds and the highest quality real estate, which is the people. Again, real estate has gotten just as overvalued as stock. The people who are renting real estate, multifamily, the people who will need it more than ever, even people who would rather buy, can't buy in a bad market and hard to get loans. It's the safe areas. It's the US Treasury bonds, which is the best bonds in the world. Other government bonds are good. Nothing's going to beat a 30-year Treasury bond, and nothing's going to beat in the real estate area, multifamily, rental real estate, because people who are thinking of buying and it's overpriced, and then they see the prices fall, they're going to be more scared. So AAA corporate, and in the world, even, who's the best house in a bad neighborhood? Already been through. Is Europe in trouble? Yes. Has Japan been in trouble forever? Yes. Okay. US is still the best house in a bad neighborhood. So and our bonds went up in 2008 crisis, 45% treasury bonds, 30-year treasury bond, and they're going to go up more than that this time. So you go to the safest places. Again, where can you get predictable rentals, even in bad times, from real estate? And that's from apartments and multifamily. And where are the best bonds that will be paid no matter what, when all financial assets have to go. Now here's my number. From 600 trillion worldwide, they're going to have to come back down to about 250 to 300 trillion. Now, think about that. Globally, 3 times global GDP at 95, $300 trillion, give or take, 250 disappears in financial assets and doesn't come back for a long time. That's the big news in the next coming years. So as long as you're protected from that in the right real estate and in the right bonds, the highest quality, longest term. If I could buy one thing, it'd be a 30-year treasury bond. US as a developed country is going to come out of this after a damn near short-term depression, the best. And our millennial generation, Europe doesn't have one, by the way, okay? Is going to be the best in the developed world. So we come out of this better, and our bonds, our US Treasury bonds, 30-year Treasury bonds would be my number one recommendation right now. ZROZ is a 25-year average, so it's a blend of 10 and 30-year Treasury bonds. They lean towards the 30. TLT is about 50-50, okay? So the ZROZ ETF will go up about 50% faster than the TLT, and the TLT has already done very well since this crisis set in at the top of the boom, and will do much better when we get it to work. In 2008, the worst of it was in late 2008, TLT and ZROZ went to the moon.